Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which has a very strong uptrend. We have seen the creation of all these monthly higher highs and higher lows, and all this uptrend was fueled by strong institutional buying. And we will be speaking about that in just a few moments when we move to the commitment of traders analysis and see how institutions were moving their orders on gold. But for now, let's keep in mind that the market is in this strong monthly uptrend, and all the uptrend is coming as a rejection away from a quite important historical structured zone. This level, in fact, was acting for many years as previous resistance, from which all these previous rejections to the downside were created. Then the market broke above that zone with this impulse, and all this previous resistance became support. The market here retested this previous resistance turn support, and all this strong monthly uptrend has been developing away from the area. So here in the monthly, everything looks quite bullish. Now, the only thing that we have to notice is that at least in the short term, there is a good probability to see a correction, because keep in mind that all uptrends are created as a series of impulses and corrections, which essentially are higher highs and higher lows. So every time the market wants to continue higher, it's supposed to create a new higher low. And every time that the market wants to resume the uptrend after a correction, it's supposed to print a higher low. Right now, we just had an impulse, and it seems like the market is ready to start a correction before then potentially continuing higher. So from a monthly standpoint, there's a good probability of seeing first a correction, a higher low, and then more potential higher highs. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, what we can notice is that the market tried going higher. However, it failed as it found resistance at the previous high. The market failed in breaking out above the previous weekly high. In fact, from here, already two rejections to the downside were created. Here we had another test, and so far the market has been rejecting the level to the downside. We can also notice that the nearest support would be around this area. This zone, in fact, was acting as previous weekly, in this case, resistance preceding the creation of this red candle. Then the market broke above and it found support at this level, because previous resistance, once it is broken to the upside, becomes support. So if the market here will manage to go and test this zone, there's a good probability of seeing strong institutional buying inside of this level. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, we can see that on gold, in the last report, we have seen a slight decrease in net positions. We went from 200,000, so 200k net positions down to 195k, with institutions adding 1,100 shorts and closing 4,500 longs. So it comes as no surprise that the market failed in breaking above the previous resistance, because institutions have been adding shorts and closing longs, therefore making gold weaker. However, if we look at the long term, we still have gone from 161.2k to 195k net positions. So we had a clear increase of net positions in the long run, making gold stronger, reaching 256,000 longs compared to only 61,000 shorts. So gold at the moment is very bullish from an institutional perspective, with a huge disparity between longs and shorts currently held by the non-commercials. So let's keep all of that in mind and drop down back to the technical side. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So from a daily perspective, what do we have? Well, here on the daily, the market still has room for more bearish price action for the market to potentially reach this, in this case, daily demand and support zone. Now, if the market will reach this level, what would I expect? Well, as usual, trading is reactive and not predictive. If instead of this level, institutions will again start to increase their net position. So at that point, what would I expect? Well, the monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised if the market, fueled by institutional longing, would reject this level to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.